Here on ITV1 Wales, we've got Secrets of My Success coming up after news at 10 now.
To the rescue, Brown's billions to sort out the banks, and a surprise cut in interest rates. But will it end Britain's financial crisis? The British economy has never seen anything like it. In all, £500 billion of taxpayers' money is at stake. We'll have all the details and expert analysis.
Also on News at 10, the banks are better off, but are you? We investigate which lenders are passing on the interest rate cuts. Plus, an explosive investigation into the Beijing Games, why thousands of drug tests are being recalled. And Diary of a Soldier, the amazing story of the man who drew the trenches of the First World War.
Good evening. A banking rescue plan on a massive and unprecedented scale was outlined by the Prime Minister today. It's put £500 billion of taxpayers' money potentially at stake. And if that was surprising in its size, there was an interest rate cut that surprised us all in its timing. That was brought forward to coincide with similar action by central banks around the world. On a day the economic history of Britain was rewritten, we'll be examining the £500 billion rescue. We'll have the impact of the 0.5% interest rate cut to 4.5% on the mortgage market and on our everyday banking and borrowing. We'll assess when we're likely to know whether today's action has begun to turn the economy round. And Sir Richard Branson, businessman and banker, will give us his view on today's developments. But first, our political editor Tom Bradby on the bank billions aimed at stabilising our economy.
It's a moment for gallows humour, all right. At the end of a day we'd surely like to forget. The Prime Minister was speaking at an event tonight when someone's mobile phone rang.
I don't know if another bank has fallen here somewhere.
Laugh. We nearly fell off our chairs.
You'll be pleased I'm not going to be giving financial information this evening.
Earlier on this extraordinary day, we got the plan that you and I and millions like us could be paying for years. And here's the strangest thing. £500 billion of our money dropped on a roulette wheel, and it's the most politically uncontroversial event of the year.
We have taken a comprehensive approach. This is not a time for conventional thinking or outdated dogma, but for the fresh and innovative intervention that gets to the heart of the problem.
No time for dogma indeed, or even consistency, but these are desperate times. The scale of today's deal is colossal. Of the £500 billion total, £25 billion is available now to recapitalise the banks, and a further £25 has been put aside for the future. Both amounts are to be exchanged for shares in the banks. £200 billion will be available in short-term loans from the Bank of England, and a further £250 billion will be set aside to guarantee loans that banks make to each other. But there was more.
The Bank of England has just announced an immediate 0.5% cut in interest rates. He has done so in a coordinated action that is happening round the world.
Phew, just what the markets, business and consumers had been screaming for. Outside the chamber, the FTSE soared. Inside, Labour MPs bizarrely reacted to what's effectively a national emergency by screaming at their opponents like children. However, the general consensus was that Brown had never looked more comfortable or confident in his chair. Cameron, though, said, fine, we part-own a lot of banks, but please tell us the executives who got us into this mess are not going to get a bonus.
Those banks that are most reliant on this scheme are the banks that have taken the greatest risks and in some cases have behaved irresponsibly. So can the Prime Minister guarantee that in those banks there will be no bonuses for senior executives this year?
We will insist in the conditions in which we issue shares that executive remuneration is as we want, based on responsibility, based on hard work and based on effort and based on enterprise.
So will these bank executives get bonuses or not?
A lot of people would say that most of the bank executives who having to go into this scheme could be accused of having completely failed to see this coming, and therefore they want to know, as David Cameron said today, no bonuses for any of them. You can't guarantee that, or you can tonight?
I don't think the right approach is to have a blanket ban on rewarding people for hard work. What I do want to see is an end to the practice where people get rewarded for bad behaviour. That's got to stop.
But some people say no one should be rewarded for failure. That's the point, isn't it?
People should not be rewarded for
and there's
failure.
Been massive
they should be
here.
rewarded for success.
So ends a day which we'll be talking about and very possibly paying for years to come. The FTSE ended up sinking to below the point it was when Gordon Brown first became Chancellor more than 10 years ago. We had our boom, and now we are very, very bust. Tom Bradby, News at 10, Westminster.
Well, it's difficult to overstate the size of this deal and its potential to affect us all. The government's £500 billion package is close to the entire yearly budget for public services. That stands at £618 billion. It dwarfs the NHS annual budget of £100 billion. And it's also the equivalent of the output of Spain's economy, standing at £500 billion. And it's a gamble that could end up making money for the Treasury if the banks recover well. But if the rescue fails, we, the taxpayers, pick up the bill. And that can only mean one of two things: public spending cuts or tax rises.
That rescue deal and an interest rate cut had been eagerly awaited by businessmen and bankers. That immediate barometer of financial opinion, the 100-share index of leading shares, seemed to discount both measures. It plunged again, down by another 5%. As our economics editor, Daisy McAndrew, reports, the simple question tonight on everyone's lips is, will it work?
Today was the day of reckoning. The city said we were facing financial Armageddon unless they got leadership, direction, help and proper money from the government. They got it all first thing this morning, and yet, for those expecting to see the FTSE jump for joy, disappointment. Whilst they tried to digest the plan, the market's attention was focused on massive losses on the Asian markets. And now the frightened markets are waiting for the banks to find their nerve again and start lending to each other.
And I think it's time for people in the market to ask themselves whether or not their caution in lending to each other is now overdone, and that with the government backing behind the banks, they really ought to loosen those constraints.
But no one can force the banks to lend again. But some bankers tonight were optimistic things are looking up.
We're in a global economy, and you cannot be totally confident that that would be the case, but it is a step very much in the right direction.
But how will we know when the banks start working properly?
What we want to see is the volumes of interbank lending going up, because when banks can lend from each other, then they can actually lend and borrow to each other. Then they'll actually be prepared to lend to other people.
As ever, the element of surprise gave the markets their biggest reaction, and they weren't expecting that interest rate cut today.
Whilst the interest rate cut was warmly welcomed in the city, nobody here believes it's going to stave off a recession. What it will do, they tell me, is, if not provide a feel-good factor, provide a feel-less-awful factor.
Because, as we all know, this isn't a small problem that can be fixed with a sticking plaster. This is a major crisis.
When you are in an emergency room, first objective of the doctor is to keep you alive, and only after that can they operate on you. We're sort of in a similar framework. At the moment, it's just a question of keeping the system alive. Eventually, we have to deal with the root cause of the problem, and that problem is, of course, put simply, too much debt.
But then this afternoon, more bad news filtering into the markets. The International Monetary Fund delivering grim warnings of a sharp global downturn. In the past few days, the banking world has been turned upside down, and today the government presented them with a new world order. It will succeed because it has to, but as yet no one's quite sure exactly how it'll work. Daisy McAndrew, News at 10.
Well, Sir Richard Branson, one of Britain's most successful businessmen, also knows about life on the banking side of the fence, and he joins us now from New York. Sir Richard, thanks for joining us. You were looking for a bigger interest rate cut, weren't you? Have you been disappointed today?
Yeah, I think I was disappointed in two areas. I think for small businesses, we needed at least 1%, maybe 1.25% interest rate cut. That would put us on par with Europe. It would still put us 2% higher than America. And not just small businesses, but people who've got houses, people who are borrowing money, they need more. 0.5% goes in the right direction, but I think the bank should have been a lot bolder. On the other area, I think that a much cheaper way for the government to have brought stability to the banking system, and if they'd done it a year ago, I don't think we would have had all this problem, would have been for the government to have officially guaranteed people's deposits. They say that unofficially they're doing that, but if they did the same as Ireland, where the government has officially stood behind all deposits, we would actually bring money into this country rather than seeing money going out of this country, and it would bring complete stability to the banking system.
So you're not happy then with the way the government's handled this crisis. What prospects then for this bailout, do you think?
Well, on both those points, it's not too late. I think the government, at no cost to themselves, could stand behind all deposits in the banks, and I think that would stabilise the banking system once and for all. And that's something I think they should do soon. I think that the Bank of England, who brought about the 0.5% interest rate cut, they just weren't bold enough, and they're going to almost definitely have to bring in another 0.5% or 0.75%